Time now to welcome on board Amisha Vora, the chairperson and MD at PL Group, joining us on the show right now. Amisha, hi, good to be speaking with you. Well, there seems to be a debate underway whether we have seen a very strong bull run or not, and what kind of expectations we should have this year. Because a lot of people were telling us that we need to moderate the expectations for returns this year. But we were just speaking with Samir of Helios, and he says that it's a very normal kind of bull run, nothing exaggerated, and there's nothing wrong with expecting a high double-digit returns this year as well. Your take on the market returns this year?
So I think that the last quarter of sobering impact on both markets as well as on economy and earnings now creates a good base for markets once again on a 12-month basis give very good returns, because all that contributed to the slowdown both in economy and earnings, I think that will be taken care of. Largely, it was contributed, as what we understand, from very high inflation, huge slowdown in capex, and both these really impacted capital goods investments as well as consumption demand. And I think that both are transitory in nature, and it will start improving as the year passes, both from central budgets and private. So by the time we end the year, or maybe we are beginning of next year, we will be better off in terms of Nifty or market performance.
All right. Hi, Amisha. Great to have you and great to be speaking with you. Help us understand what are the big themes that you believe could do well in 2025, because we have seen a lot of excitement within the quick commerce space. Even some of these new-age tech companies have done well back in 2024. Now, PSUs are not looking that attractive from an investor's point of view, but given this year, what are some of the big themes that you are working with?
So on a larger themes where we think on ground action is continuing, which was there last time, and it will continue this year also with a little blip or slowdown in between, continues to be defense, EMS. We also like the within capex, the railways, and above all, data center. So I think that that segment will continue to do well. Healthcare is one which we have been very bullish last year, when we think it's a long-term trend, and it will continue to be doing very well. So also, as the experience precedes savings and asset creation, tourism will continue to do very well. You must be knowing the kind of numbers that are happening for Mahakumbh and what kind of expectation is there for over next 1 month. I think this is just the beginning, and the domestic tourism, which means hotels, which means aviation, will continue to do well. And in terms of financialization, we continue to remain little more optimistic on the capital market linked themes, despite the little slowdown which is happening now over in beyond NBFCs.
Interesting, Amisha. That's given a lot of food for thought to us. But let's pick up on each of these themes that you just highlighted. And I want to first talk about healthcare. Because, diagnostics, the valuations are at peak. Even in the recent correction, most of these stocks haven't fallen a whole lot as much as, one would want them to perhaps to even add or, buy afresh. And then, of course, there is the hospital segment as well, wherein, there's a clear, distinct move in how some stocks are performing and how some are lagging, and the market favorite is pretty evident out there. And then there are quasi plays like maybe insurance as well, via which you can perhaps ride on the theme. What within the entire pool do you think could investors look at who are entering into the space right now?
So for healthcare, we predominantly still mean hospitals. And you're right that within the hospital listed space, there are certain stocks which have done very well. They'll continue to do well on operating metrics. but have priced in, while the others, where a lot of expansion is just coming into play this year, might start doing well. So there are some stocks which find place in our model portfolio as well as in our top picks.
And the other thing that you talked about, railways, that's quite interesting that you say that, Amisha, because there's almost a consensus now in the street that the best for railways is behind us. The stocks were extremely exuberant. The first ones to crack, when the market began its fall in October, around that time. And, if there is any, spike up that you see in anticipation of a higher allocation in the budget or any announcement in the budget, that should actually be used as an opportunity to exit railway stocks.
No, if you see the Kavach, the orders which were expected last time just started finally coming in. So there are companies which are into the Kavach segment, which have now got very good order book. But as we understand, it is still just about 25 to 30% of total order, which is expected, which is still rolled out. And these companies' order gestation is not very high. They will be executing it over the next 1 or 2 years. So you will see one of the recent listing, which is also in Kavach segment, has done very well. Then there are companies like Kernex, which are also in Kavach segment. So that segment within railways, I think, is shaping up very well. I would also like to point out that all these typical railway stocks that your screen is showing also got a little impacted because last year in the middle, a lot of mutual funds launched dedicated capital goods schemes and a lot of buying happened. And as you see, a little slowdown in execution resulted in huge correction in stocks. But the investments has not been slowing down on reviving and modernizing our railways. So I think that the theme will continue for long.
One theme that you're looking at and you're expecting that to continue for a long term. But what's the view on financials as well? Because that's something which has become, something which looks very fairly valued, but the stocks aren't doing much.
So there are 3 to 4 segments, as you know, within financials: private and public sector banking, NBFCs, which is housing and others, insurance and capital market segment. And we feel that in sooner than later, private sector banking, with its robust asset quality, a bit selective pain in MFI will start performing during current year. We also feel that select capital marketplace, which is exchanges any which way did very well, as you know, and the depositories and some of the other wealth plays will continue to do well. And this, the team will continue to hold and do better.
Okay, so some of these themes are something that one needs to watch out for. Capital markets indeed have been doing well in terms of the, the likes of BSE, CAMS, etc., and they're likely to continue going forward as well. Overall, what about consumption? Because the upper end of consumption has been doing well, but it was the mass segment and the staples and the FMCG that were underperforming. Do you think budget can perhaps spur consumption at the mass level and there could be a reversal of trade from, the urban consumption and the upper end of consumption to mass side now?
But if you ask me, even urban consumption is impacted currently, and both have contributed a huge spike in CPI and particularly food inflation to almost 9 to 10%, and overall inflation also crossing 6%, really impacted the consumption basket. And also a little switch in the consumption is also evident. I think that budget will have to take a notice of that, and how to give a little more disposable income in the hands of masses is a question that budget needs to really look at. And if that looks positively, then I think that the segment will revive.
All right, Amisha, also help us with your take on the insurance space as well, because all these investors do talk about the kind of opportunity that lies in terms of the growth for the insurance sector, but there was not much conviction when it comes to the earnings then. But just after we got the numbers from HDFC Life, hopes are building in, and taking cues from that, the other insurance plays are doing well. But wanted your thoughts on the insurance space right now?
So if you see underlying insurance coverage, premium growth has been continuing, but there have been continuous changes in regulations, and which were giving a little volatility both in terms of growth and earnings. But I think that once again, except this quarter, where still it is going to capture some of the regulatory changes, if you see next financial year, growth outlook seems to be much better, both in terms of larger premium collection, but also in terms of the accounting and the final bottom line reflection.
The space that you're bullish on, but what is it that looks like an avoid in this market? When the market gets out of the woods, from this current phase that we're in, and when we see a glimmer of hope in earnings revival, what do you think will continue to lag? And is the obvious choice then staples right now?
Currently, yes, because you can see that the brand power which is a theme that we were always thinking as a street, as a house, that with more and more proliferation of e-commerce platforms, private labels will continue to do better. With quick commerce, it is further giving way to private labels and new brands doing better. So I think all those premiums which are built in for brand power will continue to wane. So even if there will be earnings revival in the large consumer plays or FMCG plays, we still believe that margins have peaked out and margin levers could be limited.
Fair enough. But what about IT? The earnings so far have been a bit mixed, but the valuations are on the punchier side. How do you look at the IT pack right now?
I think our IT will continue to be a market performer to slightly overweight segment still, though their hiring have been almost negative last full year. But from here on, with the revival in US spending also, and the fears of US hard lending receding, I think that the overall order cycle will continue to gradually revive. And the segment will be in for a better growth than what they reported in the current year.
Amisha, great to have you on board. Thank you so much for taking the time out and speaking with us, sharing your outlook on the markets and the sectors that you're bullish on at this point in time. Pleasure speaking with you.
If you like this video, then like, share and subscribe to ET Now.